At the heart of the resistance to the new tax regime, which lifted exemption on several goods and services, are agricultural inputs which are now taxed. Using its public relations machinery, government is using the Revenue Authority to justify the taxes and enable acceptance.
Before the VAT introduction, the carton of the whole was 156,000 shillings. On the introduction of VAT, the carton of the whole went to 165,000 shillings. The increase on the whole carton, where there are 24 holes, it was 9,000 shillings. And when we tried to ask the importers what drove the increase, he gave us 3 reasons. One, it was the exchange rate. Of recent, you have seen exchange rate actually going up and down. The second rate was the market conditions, buying, demand and supply, because those who did economics, they know it better. The third rate was tax.
That argument tries to clean the hands of government as not being behind the rise in prices due to taxes of, for instance, the hand hoe, but rather blaming it on other economic dynamics. For the Uganda Revenue Authority, the parameters of exemption in some areas limit growth of some areas.
You can invest in value addition when you are under the exemption. And that is the exact thing I'm going to demonstrate. For example, this factor that the president did groundbreaking, when was it? Tororo? Sukuru. If you are to leave it under the exemption regime, the fertilizers produced in Uganda would be much more costly than those coming into the country.
Apparently, the government is caught between the need to raise revenue as a reality and the other possible political implications of certain taxes out of this year's budget speech, thus the PR. The Uganda Revenue Authority, however, warns that failure to ensure compliance by taxpayers will eventually breed acrimony with the tax body.